Friday, March 2nd, 2018, Monaco 64, home of alternative economics and contrarian views. So I'm going to look at the markets. They're getting very interesting. Stock markets, precious metals. And I want to look at an article I saw yesterday on Zero Hedge. And it says, an apocalyptic Paul Tudor Jones warns the Fed is about to lose control. So Paul Tudor Jones is a famous hedge fund manager. He's worth almost $5 billion. Very well respected trader, investor. And that was his comment yesterday. And it's interesting that I made a video on the 3rd of February, a month ago, and I said, is the Fed losing control of the bond market? And I wonder if Paul Tudor Jones is watching Monaco 64. Maybe. Am I saying I'm going to be right? Am I saying Paul Tudor Jones is going to be right? No, but it's interesting. Later on, I'll talk a little bit more about this article. Let's have a look at the markets and a couple of charts before we go into the Tudor Jones story. So gold this morning. Yesterday, of course, we had a very interesting day. Gold was weak all morning in spite of currencies being like virtually unchanged. And then the US came in, and not surprisingly, gold kept going lower. And we actually traded down to 1302. We broke some really key supports. Gold really looked really bad. And then towards the end of the day in the US, gold actually rebounded and closed near the highs and above support and key support levels. Is this like a bottom in gold and silver? Were they not, I think they're trying to knock gold below 1300 and they failed. So they had to cover their shorts, and then it just triggered a short squeeze. We traded back up to 1320. So this morning it's quarter to 8 a.m. London, and gold is 1316.60. It's basically unchanged from the 10 p.m. COMEX after hours close, 10 p.m. London or 5 p.m. New York. The range has been 1315 to 1319, so quite a narrow range. Silver as well, of course. I think silver was leading the way a little bit yesterday. So this morning we're down about 1642. Range has been 1640 to 1650. I think the low yesterday was in the teens, 1615 or something like that in silver. So silver did really well. The stock markets, as you can see by this headline here from Bloomberg, which I did a snapshot of yesterday, it says markets tank for third straight day. The Dow, of course, finished 420 points, down 420 points yesterday, down 1.68%. S&P finished down 35 or 1.3%. So what are we doing this morning so far? Well, the Dow future is down 36 points at 24,564. S&P is up 2 points, and the NASDAQ is up 10. Those are the futures, of course. Currency-wise, we're continuing to see weakness in the dollar against the yen, and normally that should be helping gold. But what I think is happening right now is that the dollar has been strengthening against the pound and the euro, and that's kind of buffered, the dollar, especially the dollar index, and they've kept gold down, of course. But I saw a headline here, that said that the governor of the Bank of Japan, Kuroda, mentioned something about stopping QE or money printing next year, and that's why the dollar dropped against the yen. I'm a bit skeptical sometimes of using quotes and statements to justify market moves. Yesterday, the major talk is that Trump announced tariffs on aluminum or aluminium, whatever way you want to call it, or steel. And that's why the Dow fell 400 plus points. But the Dow had been falling the previous days, so I'm not too sure. They might try to blame a big drop in the markets on that. They try to blame that also, the Great Depression for the Smoot-Hawley Act that imposed tariffs and quotas during the Great Depression, passed by Congress. But they never talk about the fact that there's a massive monetary inflation in the 20s, and maybe the Depression was a consequence of that. So they never that seems to be central banks trying to pass the blame on to politicians. I think they're both to blame. So let's have a look quickly at some charts. Want to have a look at, by the way, bond markets have recovered. The 10-year a few days ago got up to 292. The recent high has been 295. A lot of people are talking about 3% or 304, which is an intraday high in the yield a few years ago. Now we're at 2.83. So that means that bond prices recover and the yields drop. But still, the key level that we need to break below for the Fed maybe to be a bit more relaxed about bonds and rates is 2.63, in my opinion. That was a really key level these last 2 years or so that we tested and were unable to break. So Fed, Paul Tudor Jones and me might still be right about the Fed losing control. So let's look at the Dow chart, and this is it's a 3-month chart, daily chart. And I was looking at this chart a couple of days ago, a couple of days ago after the close, yesterday, Wednesday night, after the Dow had another big drop there. And I drew this rising wedge. And the rising wedge is usually a bearish formation. On a continuation-wise, it means that the trend that you had before the rising wedge will come back or will reassert itself. And lo and behold, you can see that it's continued. So what would be the target for that? Well, will be at least retesting the low there of 23,360 or thereabouts, and we could you could argue that it could be about 2,500 points from 25,500, which is where we broke, or it could be 2,500 from the lows. It's difficult to say, but it looks like we definitely could go and test somewhere around 22, even 20,000 in the next few weeks or so. Or it could even be days. I'm not sure if things get really ugly. Retracement-wise, I've done this before. I said that the 61.8 would be a good resistance. We broke through above that retracement for a couple of days, but it's come right back down. And yesterday, the close was 24,608, and the 38.2 retracement, which is the reciprocal of 61.8, that retracement is 24,605. So we closed, virtually on that 38.2 retracement level. So now, of course, that's going to be a key key level. We could blow right through there, or we could stay here, consolidating between the 38.2 and the 50% for a few days before retesting the low. So that's not looking good, in my opinion. And I've said before that I think the high from January at 26,616.71, all-time high intraday, will be the high for quite a while to come. So the dollar index as well, that has been helped by the strength of, or the weakness of sterling and the euro. So it's cushioned the dollar index, even though we're making new lows against the yen in terms of dollar. But as you can see there, it looks like we're forming a rising wedge in the dollar index as well. A lot like, you know, the Dow. So this to me looks just like a consolidation. And the dollar is set to go lower in my opinion. Gold, let's quick look at gold, what it did yesterday. So you can see we broke key support around 1307, and we traded down to 1302.50 roughly, but then we just rebounded really sharply, which is very unusual for gold, you know, to do that on a day like yesterday. So is that going to be a bottom? I don't know. It's but you know, longer term, of course, you know, physical gold and precious metals in general, silver stacking is the only form of how can I say monetary insurance against the fiat money system. Short term, it's frustrating, of course. The price moves. So let's have a look at Paul Tudor Jones. I'll quickly read about Paul Tudor Jones. It says here on Wikipedia, he's an American investor, hedge fund manager, and philanthropist. In 1980, he founded his hedge fund, Tudor Investment Corporation, an asset management firm headquartered in Greenwich, Connecticut. Soon after that, he created the Tudor Group, a hedge fund holding company that specializes in fixed income currencies, equities, and commodities. So as of February 2017, Forbes estimated his net worth at $4.7 billion. So yeah, actually I even have traded as a futures broker for one of their, you know, traders. He used to be a client of mine at a big bank, and then he moved to Tudor, as it's called, and I actually dealt for this guy. I didn't deal, of course, for Paul Tudor Jones. Just a little bit of background. So what did he say? What did this article say yesterday? So it says, an apocalyptic Paul Tudor Jones warns the Fed is about to lose control. It goes on to say, in a striking interview with Goldman Sachs's Allison Nathan, legendary trader Paul Tudor Jones argues that U.S. inflation is set to accelerate sharply, making bonds a very poor investment, and that the Fed must act swiftly to tackle financial bubbles created by prolonged monetary easing. Well, that's not, you know, if you've been listening to my videos, you know, that's what I've been saying. They've carried on this mad experiment of money printing and zero rates for too long. One interesting thing that he says, you know, about commodities, which I guess you can include hard assets. So because the interviewer asks him, so what are you buying? And he answers, I want to own commodities, hard assets, and cash. He says the S&P GSCI index, which is a commodity index, is up more than 65% from its trough 2 years ago. In fact, relative to financial assets, the GSCI is at one of its lowest points in history. And he goes on to say that has historically been resolved by commodities putting on a stunner of a show, stoking inflation. I wouldn't be surprised if that happened again. So this is a guy that started a hedge fund when people probably had never heard of hedge funds. When I wasn't even in the markets, I was still in high school in 1980. Here's a guy saying that, you know, he's got 38 years plus experience, and he's saying this. The other interesting thing he said was why all this is happening. And he actually said that Jerome Powell of the Fed is like General Custer at the Battle of Big Horn, just before, you know, he was completely, his unit or troops were completely like destroyed by the Indians at the Battle of Little Big Horn. I saw actually a documentary about this a few weeks ago. And the problem with Custer, he wanted a lot of, how can I say, publicity because he was thinking of running for president. So he didn't wait for the other generals to come and help him, and he went full steam ahead, and he got slaughtered, of course. But one thing he says here, that there's a lot of, you know, perils facing the Fed. And one of them is the, he says, and then on the right, the flank, I guess, at the battle, he says, and on the right, the foreign currency fighters, along with the crypto tribe, an alternative store value that only exists because of the games central banks are playing. The opportunity cost of crypto is so low. Why not own some? And he says the foreign currency fighters have strengthened by 10% over the past year. Compounding the problem, they have a powerful ascending leader, the renminbi, to challenge the US dollar's hegemony as a reserve currency. All of these forces have been drawn to the battlefield because of our policy experiment with sustained negative real interest rates. So there you have it. I couldn't agree more with Mr. Tudor Jones. So very interesting times. Keep an eye on the markets as usual. If you enjoyed this video, please like, share it, subscribe to my channel if you haven't yet. And you can also follow me on steemit.com and on Twitter. I'd like to thank everyone who have donated a little bit to my Patreon account. That helps. And Billy this morning, it's a little early. If he's not up, I'm not gonna like wake him up to be on the video. It's quite casual, you know, if he's around and I'm gonna make a video, you know, he goes on the sofa. He's almost 10 years old now, and he's a Shih Tzu for those who were asking about him. So I'll talk to you later. Take care.